Are you absolutely certain that your monthly rent check is just useless money flushed directly down a highly expensive corporate toilet? Society aggressively trains us to believe that signing a massive 30-year mortgage is the only golden escalator to automatic wealth. But what if that pride of home ownership is actually operating as an unhedged wealth brake, silently suffocating your entire financial future? Every single month, millions of intelligent professionals feel intense societal shame while looking at their lease renewals, desperately craving a property deed. Yet have you ever stopped to wonder why the world's most sophisticated financial minds frequently choose to rent their personal spaces? The uncomfortable truth is that commercial banks intentionally omit a massive, hidden ledger during your very first eager mortgage consultation. This hidden systemic illusion cleverly transforms enthusiastic buyers into lifelong asset prisoners long before they ever turn the front door key. To dismantle this powerful capitalistic illusion, we must first analyze a hidden economic metric known as the friction factor vector. When you buy a house, your initial monthly payments do not actually build equity. They are completely consumed by front-loaded amortized interest. Add the unrecoverable velocity of local property taxes, mandatory home insurance, and unpredictable monthly homebuyer association levies directly into your calculation. Unlike a liquid stock portfolio, a physical house suffers from continuous structural decay, requiring a mandatory 1% annual maintenance buffer. This turns the traditional brick foundation into a sophisticated leaking asset bucket, where capital continuously evaporates through invisible friction valves. Then comes the massive opportunity cost of your initial down payment, which instantly locks up tens of thousands of liquid dollars. If that exact same down payment were placed into a diversified index fund, it would compound uninterrupted at roughly 8% annually. By trapping that liquid capital inside a single illiquid asset, you are making a massive, unhedged bet on local real estate appreciation. Furthermore, real estate is plagued by extreme transaction blindness, completely hiding the massive friction costs of buying and selling physical property. Agent commissions, closing fees, and transfer taxes instantly erase a massive chunk of whatever nominal appreciation your property achieved over time. The human brain, suffering from intense sunk cost bias, vividly remembers the final sale price while completely erasing maintenance costs from memory. This psychological blindness severely reduces your asset velocity, anchoring your career to a single geographic location due to an illiquid burden. When you run the actual mathematical simulations using a precise rent versus buy calculator, the cultural narrative completely shatters to pieces. In many high-cost metropolitan areas, a disciplined renter who invests the price differential aggressively accumulates wealth at a much faster velocity. Renting actually provides a fixed, highly predictable maximum exposure to housing costs, completely shielding your capital from sudden catastrophic repair bills. Yet, traditional banking institutions spend billions of marketing dollars annually to ensure you keep chasing the outdated dream of property ownership. True financial sovereignty requires you to look past the physical size of your front door and focus entirely on your absolute liquidity. Upgrade your everyday financial intelligence right now by subscribing to Economecha and never sign an unhedged, blind capital contract again. To truly understand how this unhedged wealth break paralyzes your lifetime net worth, we must dissect a real-world case study of capitalistic asset velocity. Consider a disciplined professional who deliberately rejects the heavy societal pressure of homeownership and commits to an aggressive, liquid investment strategy instead. Instead of burying a massive $100,000 liquid capital stack directly into a stagnant property deposit, she channels that full amount into index funds. While her suburban peers proudly boast about their nominal property value increasing by a modest 3% annually, they ignore their massive hidden friction. Meanwhile, her liquid index funds compound uninterrupted at a historical 10%, generating massive compounding interest without a single dollar lost to maintenance. When her peers eventually decide to liquidate their property after a decade, they are hit by a brutal 6% broker commission fee. Add the legal transfer taxes, recording costs, and expensive escrow fees, which instantly evaporate a massive portion of their supposed paper wealth. In stark contrast, our liquid investor possesses ultimate asset velocity, allowing her to seamlessly redeploy her capital anywhere in the global market. The traditional homeowner remains geographically anchored, frequently missing high-paying career advancements in distant cities simply because their wealth is completely illiquid. This critical concentration risk means their entire financial destiny is dangerously unhedged, tied entirely to the volatile health of a single zip code. Furthermore, they completely erase from their mental ledgers the thousands of unrecoverable dollars poured into continuous structural decay and emergency plumbing. When a roof leaks, the renter simply calls the landlord, keeping her capital fully intact, while the homeowner faces a $15,000 emergency bill. During the first 7 years of a standard mortgage, roughly 80% of your hard-earned monthly payments go directly toward bank interest. You are not actually building a solid wealth escalator. You are merely renting the money from a massive commercial banking institution instead. By the time the homeowner finally begins chipping away at their actual principal, the disciplined liquid investor has already achieved total financial escape velocity. To break free from this deep-seated cultural conditioning, you must immediately implement a scientific asset management life hack known as the environmental default switch. Stop trying to rely on raw willpower to save money, and instead engineer a rigid, automated barrier that forces capital accumulation. Calculate the exact mathematical difference between your current monthly rent and the true, fully loaded cost of an equivalent local mortgage. Set up a mandatory, recurring automatic transfer that routes this precise rent differential directly into a low-cost, liquid index fund on payday. By making this capital distribution completely invisible to your daily spending habits, you effectively deprogram your subconscious urge to waste excess liquidity. This precise behavioral environment control systematically shields your growing net worth from the pervasive marketing illusions of traditional retail banks. You successfully transform your monthly housing choice from an emotional, guilt-ridden lifestyle decision into a highly calculated, high-yielding wealth optimization mechanism. True financial sovereignty is never measured by the physical size of your front door, but by the absolute velocity of your assets. Deprogram your mind from the real estate myth today. Take absolute control of your capital liquidity and build authentic wealth tomorrow. Upgrade your everyday financial intelligence right now by subscribing to Economecha, and never sign an unhedged, blind capital contract again.